with my focus areas including labor, healthcare, insurance, housing, and workers' compensation. I want to thank the Maine Department of Labor, Commissioner Foreman, Director Monahan, and Deputy Director Parson for partnering with the Maine State Chamber of Commerce to spread the word to employers and employees alike regarding the paid family and medical leave program. As you should all know, the formal process for this program really starts on January 1st, when employees and employers will start paying into the fund. The goal of the Chamber, other business advocacy organizations, and the Department of Labor is to get practical information out in a quick, digestible way for employers and employees to be able to operate within what is required statutorily. This is a monumental piece of legislation that affects every employer and over 600,000 employees across the state of Maine. Throughout this informational session and beyond, no question is a dumb question. So please reach out to the Chamber, another business advocate group, or the Department of Labor regarding not only how your business will be affected, but how to operate your business while looking out for your employees the best you can. As we wait for the final rulemaking to be released to alleviate pending questions, I again want to thank everyone from the Maine DOL, specifically Luke and Reggie, for this continued collaboration and for open lines of communication to be continued regarding the most significant law impacting employers and employees in a generation. So thank you for the time, Reggie. Really appreciate it, and I will turn it back over to you.
Thank you, Jake. And
Ask people if they can see you, Reggie.
and just to clarify, are people able to see me speak? Yes, okay, awesome. And also, I just also want to clarify, Jake, we did get your comments recorded, but we forgot to hit the record button before we started. So I just wanted to, again, thank everybody for attending here today. And for the Maine State Chamber of Commerce being wonderful partners. And obviously, to repeat again, if you missed it before, this webinar will be recorded and posted on our webpage on Paid Family Medical Leave. So now with that, I will go ahead and share my screen once I get the slides up. So please bear with me for a couple of seconds. Excuse me, 1 second. Sorry for the delay. It's getting me.
I would go to presentation mode and then share your presentation. Yeah.
Thank you all again for your patience. All right, so everyone should be able to hopefully see the presentation. And if not, please let me know. So we'll begin. So basically a general overview of the program is that last year in 2023, Governor Mills and the state legislature adopted the Paid Family and Medical Leave program. Maine became one of 13 states to adopt a paid leave program. So we have certainly learned a lot of lessons from different states as we have not only done the rulemaking process, but other pieces of implementation on this law. This law will provide up to 12 weeks of paid leave for either family, medical leave, safe leave, or leave related to a family member's upcoming military deployment. And then finally, this law will apply to most employees and employers in the state of Maine, with the exception of the federal government. Again, so to talk about the reasons for leave. So again, I kind of mentioned they were for family, medical, safe leave, or upcoming military deployment of a family member. And these are just general examples, and we'll definitely be happy to address any questions around the reasons that individuals can take leave. So I'm going to slow down a little bit here to talk about really what to expect not only next year, but going into 2026. So the first thing that is going to happen is that the rules for this program are going to be adopted by January 1 of 2025. The department has been working incredibly hard, not only through the formal comment period, but the informal comment period to really try to get feedback from both employers and employees about what to expect for this program. So we are certainly aiming to meet that January 1 deadline. But another important thing that's going to happen is by January 1 of next year, payroll deductions will begin for this program. Even though the benefits will not go live until 2026, the fund must begin to be built in order to ensure that we have sufficient funds to pay for benefits and other administrative costs for the program. And I'll talk more about what the premium amounts are in a later slide. And then one thing for certainly employers to keep in mind and to be on the lookout for is the launch of the main paid leave portal. This portal is going to be a very crucial tool, not only for the department, but to also help employers with, for example, potentially applying for a private plan. But every single employer in the state of Maine, and I believe any out-of-state employers that have Maine employees, will have to register for this program. And this will also help with determining what the premium liability might be if you have 15 or more employees, and also where quarterly wage reports and premiums will be due for the program. And again, we're certainly happy to address any questions that might pop up as a result of me talking about the portal. And then finally, on May 1, 2026, benefits will go live. So I'm gonna slow down a little bit here and talk about premiums. So the premiums for this program is set at 1% of an individual's wage rate that is split between the employee and the employer. So essentially, both parties do have a stake in the success of this program, in the building and success of this program. And in addition, self-employed individuals and tribal governments can elect coverage, so they are not required to participate into the program unless they would like to. And if they would like to, the premium rate for this program will be at 50% of the premium rate. And to talk more about the breakdown of what 1% looks like, we use general examples. So I'll begin with employers with 15 or more. So if you are an employer that has an annual payroll of about $1 million a year, that 1% for you would be an annual premium of $10,000 for that year. And as you see, based on the breakdown, the employer will be responsible for paying 0.5%, and also the employees will pay 0.5%, equaling 1% of wages. The employer could, but is not required to, pay the 0.5% employee contribution on their behalf. But again, that 0.5% can be deducted from employees' pay. If you are an employer with less than 15 employees, however, it's going to look a little bit different for you. So in this case, the employer is exempt from having to pay the 0.5% employer share, but 0.5% still must be deducted to pay for the program. And again, that can come entirely from an employee's pay. And some questions that might pop up now or in the future about where is this money going? The money will be paid into the Paid Family and Medical Leave Fund. So this fund will exclusively be used for, again, paying benefits and any administrative costs to operate the program. So we try to provide some examples of the premium amounts and what they look like by income. Again, these are just general examples. We know that everybody's income level is going to vary. But again, we just try to use some general examples. So if you are earning about $35,000 a year, what 0.5% looks like to that employee would be $3.36 a week or $175 for the year. If you're someone who's earning about $57,000 a year, you'll see it's going to be about $5.48 a week or $285 for the year. And then finally, for someone who's earning a slightly bit on the income scale, for them it'll be $8.65 per week or $450 a year. And I just also want to remind folks about the cap, I guess, on what contributions are. The cap on contributions are based up to, I should say, the Social Security wage limit, which is a number that is published on an annual basis by the Social Security Administration. So we know that folks might be earning wages that might exceed that amount, and we'll certainly be working to develop a process on how to seek a refund if you have overpaid into the program. So to talk a little bit about, what the requirements and eligibility is for the program. So I'll start with notice. So generally, employees will have to provide notice on scheduling a leave unless it is an emergency. And I'm happy to address any questions about what reasonable notice is, because in the proposed rule, we did say 30 days would constitute reasonable notice, but again, that's could be subject to additional changes, especially since we've received comments from the proposed rule. But also proof must be provided as well that an individual qualifies for leave. And so that will hopefully be established later in the process. So for example, if it's someone who's asking for medical leave, you might be asking what documentation that might be needed. If you're asking for a different type of leave, that might require a different certification or a different form. But again, we hope to lay that process out later as we're continuing into the implementation process. But in addition to that, there is an income requirement for this program. So an individual must earn 6 times the state average weekly wage in 4 of the last 5 quarters before accessing the benefit. Some folks might be asking, what is the state average weekly wage? And that's a very good question. So that number is developed on an annual basis by the Maine Department of Labor. So what you see on this slide here might change in 2026 when benefits go live. But for the purposes of just trying to clarify how do you calculate 6 times the state average weekly wage, we used the number for 2024, which is $1,144. So if you essentially multiply that by 6 over the number of quarters that we're looking at, that employee has met that monetary or income requirement. And then finally, and this is something I know we certainly are going to be having to navigate now and into when employees are applying for the program, but undue hardship. So the term undue hardship is pretty unique to many paid leave states. Maine is the only state in the country that has a paid leave program with the term undue hardship. And so we try to balance many interests, and we did come up with a framework in the rule on how employees and employers are to navigate undue hardship. And again, we recognize that this is something that we're all going to have to be working through together to ensure that the program success is off to a good start and continues into the future. But again, we are certainly happy to answer any questions about undue hardship. So there is a benefit associated with this program. So again, it's all kind of tying back to the state average weekly wage. So when we're talking about an individual's average weekly rate, we're looking at how much this individual earns on a weekly basis, taking into account the income information that we have on file or that's been given to us. So in this case, at a minimum, individuals are going to earn a 90% wage replacement on their earnings at or less than 50% of the state average weekly wage. So if you cut that $1,144 number in half, that is what will help us get to the 90% wage replacement. And then any earnings over 50% of the state average weekly wage will be replaced at an additional 66% for the program. And then finally, based on what the law is requiring us to share, that these benefits are capped at the state average weekly wage. That is something that is a statutory requirement. And again, that number of $1,144 is subject to change on a yearly basis. So we try to help folks understand the benefit amounts, to try to help break down what is the two-tiered wage replacement system. So again, we used similar numbers about annual salary and weekly wage. So as you see from the first item, someone who's making $35,000 a year, their weekly wage will probably be around $673. Only looking at the tier 1 wage replacement alone, by determining what is 90%, that person's going to receive $514. And then because this individual does earn over 50% of the state average weekly wage, they're going to receive an additional $66, equaling their weekly benefit amount to be around, I think, $580. If you're someone who's making about $57,000, you'll see what the weekly wage is. You'll see what the tier 1 90% wage replacement is. And then because their earnings are over 50% again, they're going to be earning that weekly benefit amount generally, or as an estimate. And then finally, someone who's on the higher income scale, again, you will see the same number of 90% wage replacement. And again, because they've made over the state average weekly wage, or over 50%, you'll see a little asterisk there. And you might be asking, why is there an asterisk? Well, again, the state law requires these weekly benefit amounts to be capped at the state average weekly wage. So again, we just want to kind of highlight the importance of the benefit cap on a weekly basis. So to talk a little bit more about the paid leave portal, and again, we're happy to address any questions. So again, this is an online system for every employer in the state of Maine, including out-of-state employees that have Maine employees to register for this program. This will also include an opportunity to designate a payroll processor, and again, as I highlighted before, file wage reports, and remit quarterly contributions for the program. And we hope to have more information out about the portal very early months of 2025. And again, this is an opportunity for self-employed individuals and tribal governments, if they elect coverage, to also use the portal to do so. And just to kind of help highlight, what's going to happen in 2025 in terms of the wage reports and premiums, for the first quarter of 2025, it'll be due in April. And so some additional information for employers that you're navigating through this. So there are job protections associated with the program. So employees who have been with you for at least 120 days or more, they are entitled to return back to that job, or a job they had, a job equivalent to the one that they had prior to taking leave. These benefits are also portable, and I guess what we mean by that is if employers are participating in the state plan and your employee moves to another employer that participates in the state plan, they won't necessarily lose their eligibility. They will still obviously have to apply for the program and have to meet the qualifying reasons, but they won't lose their eligibility absent a private plan substitution process, which we're happy to address any questions about that as well. And then finally, there are notice requirements as well. So similar to employees providing notice, unless for reasons that constitute an emergency, employers must notify employers about the paid family medical leave program. And some pretty exciting news, I guess, at least on our end. We have finalized the employee workplace poster that is essentially in every break room across the state. You can find that poster on our webpage on Paid Family and Medical Leave. We just actually put out an e-blast this morning announcing that. So that would be something that would encourage or help with the notice requirements. But there are also some statutory requirements about notice with employers that I would encourage you to look at the paid leave law about. But in the event that the employer does not provide notice to their employees, about the program, the employee's obligation to notify the employer about them taking leave is waived. And that is something that is statutorily, that is in the statute. And that was not something that we created by rule. So just to help clarify the differences, what's in the rule and what's in the statute. All right, so going forward, this is what we encourage you to do, certainly encourage you to do. So the first thing is to visit the webpage on Paid Family and Medical Leave. Again, that's where you can find information such as an FAQ or a general PowerPoint about the program itself. And also to get notified. And what we mean by that is when you visit the webpage on paid leave, you should see right at the top of the homepage a section that says get notified. And that is where you would use your sign up using whatever email address you wish to use. And that is where folks can stay informed about anything related to implementation about the program, because we know things are moving pretty fast as we're trying to meet statutory deadlines, and this amazing team is really doing a great job trying to provide as much information as possible to the public. So certainly encourage you to sign up for our interested parties list. And then finally, register for the main paid leave portal as an employer as soon as possible and as soon as that portal goes live. That is something that is one of the key components of success for this program, is that we have employers register for the portal. So with that, I will stop sharing my screen and then we'll get into the Q&A portion. And I see we have a lot of questions, understandably, and so I will, with the assistance of our.
So there were a lot of questions, Reggie, around Maine-based employees or total employees.
Mm-hmm.
So what is the minimum number of employees required to participate? And for example, for the 15 threshold, is that 15 employees in Maine or 15 total employees?
Yeah, Lou.
Yeah, those are great questions. And also in the e-blast today, we put out a document on our webpage. And again, our webpage is maine.gov/paid leave. And there's a new section called Employer Resources. And within that, there's the PFML labor law poster that Reggie was referring to. But there's also what we're calling what employers need to know one-pager for 2025. So this is immediate information that hopefully is helpful for employers as they're getting ready for contributions prior to the rules being finalized. And the one-pager, I think, answers all those questions, but I'll summarize it here, is that this law applies to any business with at least one Maine-based employee. So that could be a business in New Hampshire with five employees, and one of them is a Maine-based employee. That Maine-based employee is covered under this law. When you're counting your 15, you are only counting the Maine-based employees. So if you are a company in Connecticut and you have 50 employees, but you only have 3 Maine-based employees, your company size for the premium liability is 3. And then the locality of what is a Maine-based employee, we use the same test as the state unemployment insurance law of locality of work. It's a 4-pronged sequential test. It's in statute if you want to see the legalese of it. But in that one pager that I described on our website is the 4-pronged test in plain speak, or at least as plain as we can make it, for what constitutes a Maine-based employee. So please check out that document. But again, this law applies to any company that has at least one Maine-based employee. When you're counting your 15, you're only counting Maine-based employees to determine your premium liability. And locality work is defined on that one pager in our frequently asked questions document as well.
Thank you. I see some raised hands that have been up for a while, so I will shift over there. So I'll start with first April, Kimberly, and then Margaret. So I will start with April. If you're still there and if you can hear us, please feel free to ask your question. All right, so all right, I'm gonna ask to unmute if possible, but if not, we'll certainly come back to you. And so now we'll go to Kimberly if she is available. Kimberly, can you hear us? So not seeing there, but again,
I'm not sure they can ask questions, I don't know.
oh,
Let's keep doing some written ones.
okay.
Yeah.
All right.
So there was some confusion around when the portal is launching. I think people heard it as launching next winter, and how would you do first quarter reports?
Okay, awesome, and so, yeah, so the portal will launch, in early, 2025. So hopefully that helps.
Yeah, I can talk about the portal too. So, the main paid leave portal is being built by Fast Enterprises, which is the same company that built the main tax portal. So it's going to feel very similar to that. It will release in very early 2025. As we get closer to launch, we will announce the hard launch date. We're also going to do a soft launch date, probably prior to with some payroll companies. Registrations, like Reggie said, we do need every employer with a Maine-based employee to create an account on the paid leave portal. It takes about, 15 to 20 minutes, depending on your, proficiency with computers, but it is very streamlined. You'll just need basic employer information, your FEIN, your business name, address, corporate officer name. You'll set up an account, a password. Once you create, and you'll answer the 15 threshold question as well as part of registration. Once you have your account created, you can designate a payroll company to file on your behalf if you choose. But releasing it in early 2025 allows hopefully a full 3 months for registrations before we come to the first payroll quarterly reports due and remittances that will start April 1st, 2025. So we'll have a full 3 months from which employers can register for the portal, designate a payroll provider if they choose, and then the quarterly payments and the wage reporting will begin April 1st, due by April 30th. And if we are allowed bulk filing, we've been working with several large payroll companies, but also some small local ones. And we are not going to reject bulk files of employers who are not registered yet, provided by it's a certain percentage. If it's 80% of the lines on a bulk file are not registered yet, that file might get rejected. But if 2 or 3 on a bulk file of like 50 employers, we're not going to reject a bulk file based on 2 or 3 non-registrations. We'll just suspend the return. So that should allow plenty of time for people to get registered in preparation for the wage reporting.
And then I know we're having, unfortunately, some folks are not able to chime in terms of the hands raised, but we're certainly working on that. But we did get a very, hopefully a simple question about whether the deduction is pre-tax or post-tax, and I believe it's
So the 0.5% comes off of wages before you deduct taxes. That's what every other state PFML program has done, and what state UI also does. And we benchmark our definition of wages to state UI with the caveat that it's applied to a much broader range of employees within the state. Because state UI does have certain exemptions for certain employment types, and that's not true of paid family medical leave. We cover almost all workers and businesses within the state besides the federal government, but wages are calculated similarly to state unemployment tax, and the 0.5% is taken off the pre-tax amount of those wages.
And then one other question we got. So is it written into law that the employee must contribute, or are employee contributions optional?
So I'd have to pull the statute language, but I know the law there's a question of like how that's worded, because I know that affects the eventual taxability of if the employer covers the employee portion of the premium, how that is worded in the statute affects the ultimate taxability of that. So I'm gonna look up the exact statute language while we do some other ones.
Okay. So now talking about the January 1 start date. Is that the first paycheck in January or the first payroll that includes January 1st?
It's the first pay date in January forward.
And questions are definitely rolling in, which are good. So, our payroll companies preparing for this. We have certainly have been, receiving a lot of emails and phone calls, from payroll companies. We've been engaged with the National Payroll, Consortium and ADP and, other smaller, payroll companies as well. And we actually did a webinar with Paper Trails just recently, to help, payroll companies prepare for the upcoming January 1 date.
Yeah, and we've said we do have bulk file wage specs. We have a rough draft that we're finalizing or have finalized. We've sent that around to all the major payroll companies, but also with all the local ones we can think of. If you think we've missed companies, like if you're working with a payroll company that has not received our bulk file wage specs, please email Jake LaChance and he can let us know of that list. But we are working proactively with payroll companies. We have been for several months. And we have several of them actually joining us for usability testing in a couple weeks actually to test out the portal. And also another kind of a pitch for the portal. We are going to be doing 2 demos of the main paid leave portal in December. We'll put out a press release as they get closer with the exact dates. And that will be to demo the functionality of the portal, one focused on third-party payroll administrators and one focused on employer functionality. So registering for account or doing single filing wage reporting as an employer. So please sign up for the Get Notified list, but we will be doing 2 demos of the main paid leave portal in December, one focused for TPAs, one focused for employers. And again, we've been working with payroll companies, the National Payroll Consortium, but if you have a payroll company that has not seen our bulk file specs, please let Jake know and he can get us a list.
And just before we get to private plan question that we got, so our payroll withholdings based on where the employee lives or where they work?
That's the locality work test. So I would encourage people to look at the one pager.
Okay. So now we're gonna move a little bit into the questions that we're getting. And again, we can always shift topics, but this one's about private plans. So will employers that intend to use a private insurance plan be required to begin withholdings in January?
Yes, because we're starting the application for private plan substitutions in April, because we need rules to be finalized to even define what substantial equivalence of a private plan is. And then we're allowing time for the market to establish private plans. So once the rules are finalized, the main Bureau of Insurance will put out a checklist of what is a substantially equivalent fully insured product. Insurance carriers will apply for certification of substantial equivalence with the Bureau of Insurance, working collaboratively with the Maine Department of Labor. Those plans, once certified as substantially equivalent, will be available on the market, and employers can buy them or enter contract with them. And that means to essentially purchase a policy, but you have the option to delay the start of benefits up until May 1st, 2026, if you choose. And this is a similar approach that Delaware PFML program used. So entering a contract or buying a policy, but choosing to delay benefits to when the state plan starts. That's a fully insured private plan substitution route. And then we'll put out a self-insurance application on our website once the rules are finalized as well, of what a substantially equivalent self-insured private plan is.
Mm-hmm. So to kind of get to the qualifying events. So some examples of qualifying events, again, could be someone who is growing their family, either through birth or adoption or fostering, or for a family member that might have a serious health condition, and that employee might need to take time off for that. So that's one of the qualifying reasons. Again, the other qualifying reason that could be is for safe leave. So these are for individuals, meaning the employee or the employee's family member. They might need to take time off to stay safe from any abuse or violence that takes place. And then for medical leave, which is you're dealing with your own serious health condition. And then finally, for leave related to a spouse that might be getting ready to go on active duty. And another question is, which I think we are getting to, this one I can answer pretty quickly. Are pets included? And the answer is no. Humans only. And then when it comes to family member, the the definition of family member also includes those who have a personal or significant bond. That is something that is in the statute. So yeah, so I guess that hopefully will address their question. And so who is, I guess this other question is about who's considered a family member. So I would certainly encourage folks to look at the paid family and medical leave law under the definition of family member, and that will hopefully give folks an understanding. But it's either family members that could be related to you by blood, but again, I would look at the statute on certain family members, including family members that have a personal significant bond.
And I got the reference
Oh, you
now
do?
for the,
Okay.
So I know people are asking in statute, how is it worded with the responsibility of who pays the premium? Because I know that that will legally affect the taxability of premiums and if the employer covers the employees. So the section of the statute that's covered under is 850 section F subsection 5 employers. So I would refer to those two specific paragraphs about the may versus shall. We're hoping the IRS provides guidance on the taxability of PFML benefits, both in Maine and nationally, but also the question about if the employer covers the employee's portion of the PFML premium, is that a tax deduction for the employer? The IRS has not answered those two questions for Maine or nationally. Any PFML program. Reggie and I met with the IRS along with all the PFML administrators about 2 months ago, asked those specific questions, and they said they are going to be developing guidance to release, they said this summer, but we're heading into fall now. So we're hoping to have official answers for those now about the taxability of PFML benefits when benefits go live in 2026. And if the employer covers the employee's portion of the premium, is that a taxable fringe benefit for the employer? We don't have the IRS guidance yet, but I would refer people to the wording of the statute in the meantime.
And yes, the presentation will be shared, and again, it'll be posted on our webpage on paid leave. So now shifting back to the employee count. So this person asks, define employee for the 15 threshold. Are we talking part-time, full-time employees? And then how do we calculate the premium for per diem folks?
Yeah, so it's any wages paid. So it is part-time, full-time, per diem, seasonal, and it's any wages paid, in a payroll, you're taking 0.5% of that amount. And it's, we define how to count to 15 in our proposed rules, the second draft proposed rules, section 10, which is premium, subsection H is how to count to 15. It's also on our frequently asked question document. It's also on that one pager that I referenced earlier, hopefully in a little bit more plain speak than the statute and the rule language. But it is counting anybody that's on your payroll, whether that's full-time, part-time, seasonal, and per diem. Any amount paid, any wages earned in Maine is subject to the premiums.
So getting now to a different, well, actually two questions. So employees who are husband and wife, do they both qualify for leave for the birth of a child, for example?
Yes, they can, absolutely. There's no restrictions on, who you take leave for. If they're part of the same employer, I mean, the employer can certainly file an undue hardship if they want to prioritize one over the other. But there's no prohibition in statute that limits, person taking, leave for the same family member, because caregiving situations can be complex sometimes. You have somebody who's watching morning, somebody who's watching evening. If parents are bonding with the child, they both obviously want the time to bond. So, but there is no prohibition in statute that disallows that. The employer does have the right, if it's working for the same employer, like two employees who are family members trying to take leave on a third family member, the employee or the employer could make a claim of undue hardship if they couldn't lose two people at once.
And then the second question attached to that, so if an employer offers a short-term disability plan, will the employee be eligible for PFML as well?
So we do not treat short-term disability in proposed rule as an offset currently as it's structured in proposed rule. And the rationale there is that PFML provides partial wage replacement, and if an employer wants to provide a short-term disability plan to bring that employee, especially high wage earners, closer to the 100% wage replacement, we want to leave that open for the employer. So we do not treat short-term disability income as an offset to PFML benefit. So if the employer wants to continue to offer that as a benefit to their employees, if you have a high wage earner that's only getting, let's say 40% wage replacement from a state PFML benefit, and you want to augment them to 100%, we want to make sure you have that choice.
So some other questions we got. How many weeks for a leave? So, again, the employee could take up to 12 weeks of paid leave. And maybe just to kind of explain this more, they could take it continuously, so they can take up to 4 weeks off, 6 weeks off, whatever that they're requesting in their application. Or they can take it for intermittent leave. So again, the employee is working and also potentially taking paid leave for a qualifying reason. And then finally, reduced leave, where the employee is still working, but their schedule looks a little bit different because they're on paid family medical leave and they're taking time off to deal with the qualifying reason. And then how often can leave be used by the employee? So we actually got this question last night. So again, the employee could take it up to 12 weeks in a benefit year. I believe they can take it for multiple qualifying reasons within those 12 weeks. So they could only use it only for medical leave if they need to, or only for safe leave, or only whatever qualifying reason that they can use it for. But they can use it for those 4 qualifying reasons within a benefit year.
Yeah, you could have multiple claims.
Yeah, multiple claims.
Within a benefit year, they can't add up to more than up to 12 weeks. So you could have somebody who has a medical event who needs 2 weeks of paid time, and then they need to take care of a family member for 6 weeks. So you could have 2 separate claims within a benefit year. They just can't use more than 12 weeks within a benefit year. And the other thing to kind of answer along those lines is that for medical claims and for family claims of taking care of somebody who's ill, this is provided by medical certification. So somebody doesn't just, if they're taking a medical claim, they're not automatically entitled to 12 weeks. They're entitled to the amount of time that a medical professional says they're unable to work. The only kind of claim type that has like an open-ended, 12-week as default is the bonding claim, where you have the right to take, up to 12 weeks to bond with a new child. But the rest of the leave types are really tied to a medical event, whether that's you as the employee or taking care of a family member who's having a medical event, and a medical professional signing off that this person's unable to work for this period of time.
And I think we got a clarifying question.
So I think there are questions around, if the withholding starts January 1st, 2025, and then, what is the process until, I believe the portal will be open by then, right? And then what is the process between that and then doing, getting an account number and doing the reporting at the end of the quarter?
Yeah, so the statute's very clear that the quarterly reports and the quarterly remittances are due quarterly. So I think the question might be getting at, they're deducting, weekly deductions. Where does that money go? And it's either for the employer or the TPA to hold until we get to quarterly payments. But the statute's very clear about the payments are made quarterly to the state. So that either needs to be held by the employer or by the TPA, and then provided after starting April 1st, due by April 30th is when you would pay the quarterly payment amount. Because you'll file a wage report, the system will tell you how much premiums you owe based on that wage report, and then the employer or the TPA will pay that amount. Everybody should be registering in that first 3 months, but it's not required that you will have an account number by the time your TPA files a bulk wage report. We're not requiring an employer to have an established account number by the time a TPA files a wage report for you. And if they're getting to the point that they're filing a wage report in a bulk file, come let's say April 15th, and you haven't signed up for a portal account as an employer yet, we'll suspend your return, but we're still going to accept that bulk file from the TPA. And you will be registering with your FEIN. You'll get generated an account number for the system, but in terms of how we track employers, it's by FEIN.
Awesome. So yeah, we're just clarifying questions as we're getting them. So, if an employer is delayed in withholding premiums for 1/1/25, can they retroactively withhold missed payments from the employee at a later time, which,
Cannot.
yeah, right, which we addressed in.
And that's either in rule or statute. I think it's in rule that you cannot retroactively withhold if you miss a withholding unless the person has a zero amount
Right.
check. And this was, for like service industry that's paid with cash. So if somebody has, a zero paycheck, you can go back at a later time and retroactively collect that premium due. And the other situation that I think is in proposed rule now is that with written agreement between the employee and the employer, you could have another payment amount, other than weekly withholdings, whatever you withhold at. But it is in rule now that if you miss a withholding period as an employer, you can't retroactively go back and pull that from your employee.
Okay, I know we got a question here, but I'm sorry, I don't know if you I can recite it. So it says, someone spoke to ADP and they said, since this is a tax, is it automatic that the employee is gonna be set up January 1, 2025 to pay the 0.5%? So if the employer is gonna pay it, they imply that the employer could pay, that the employer could cover up to their pay to cover it. Please advise. I don't know if
I'm not sure what it's asking. I mean, the employer has the choice to cover the employee's premium if they want to.
right.
Starting with as soon as you want to.
I think what this is getting at, Luke, is that this person is saying they spoke to ADP and ADP said that since this is a tax, it will be automatically set up that the 0.5% will come out of the employee's paycheck. It'll be set up that way on January 1st.
Yeah, we've
So-
been talking to ADP, so they have our bulk wait. I'm not sure if that's maybe what they're getting at, but so ADP is one of the payroll companies that we've been working with. So I think they have their payroll system ready to go for their clients, is what it sounds like, but I'm not sure.
I think their question is if the employer intends to pay that 0.5 because they are, under 15, like how would they go
Oh,
about
they
it?
should let their payroll company know, yeah. If they want to. And I know there's some payroll companies, because I've seen emails, where they're asking their clients, would you like to cover the portion or not? But I'm guessing some of the larger payroll companies might be setting it up in their systems as automatically split where the employee's paying the 0.5%. And if you as the employer, because it's written in statute as it may, if you as the employer want to cover your employee's portion of the premium, I would let your payroll company know, because I think they've been designing these payroll systems, since the law came out and since we started working with them about, the data we're collecting with the bulk filing, so.
And so we have just under 10 minutes left, and I know there's still some raised hands. And we're trying to fix the tech piece, but if we can in the next 9 minutes, I would certainly encourage you to put it into the chat and be anonymous. But actually, I will try and see if this does address any concerns. All right, April, can you hear us? Sorry if you cannot, if you're still having tech issues. Let me see if this works. All right, April, can you hear us? Still no luck. Okay. Again, apologies for this. And we would definitely encourage you to just continue putting your questions into the chat. And so I guess the next question is, what about employees that are under a collective bargaining agreement, which I know we've got a lot of questions about? Are they covered under the law?
So I would refer to the FAQs on collective bargaining agreements, because it depends on public versus private collective bargaining first. But if it's a public collective bargaining contract that has not expired since whatever date the law was effective, which I think was 10/23/23, you have to wait for that. If you're under a collective bargaining agreement that hasn't expired since that date, you're outside of the law until your collective bargaining agreement, only if it's a public sector one, expires for the first time. So for instance, let's say you're a teacher with a contract July 1st, 2023, and your contract is not expired yet. you would be outside of the law, not included on wage reporting until your contract expires. Let's say it expires July 2025, at which point you're back now under the law because your collective bargaining agreement has expired one time since the 10/23/23 date. And so now that person is responsible for wage withholdings and also has coverage from that point forward. That only applies to public sector CBA agreements, not private sector. But again, it's a pretty complex thing that I just said, so please refer to our FAQ on that. We do talk about collective bargaining agreements in that document.
And so we got a lot of questions about what is essentially a benefit year? Is it a calendar year or a rolling period of 12 months? We did just clarify this in statute, and I believe that your benefit year will begin on the first date of your leave. And will conclude 12 months later. I believe that's how.
Yeah, so basically it's rolling.
Yeah, rolling.
It's not calendar, it's rolling.
Yeah.
From when you apply or when you take leave, rather, excuse me.
And so we do have, again, about 5 minutes, but I will try to get to this question. So this individual works for a church in the state of Maine. And they said they do payroll. So if churches in Maine have their own EIN. So I think this kind of gets to the employer account. So do we fall under one business or separate businesses, assuming this employer has separate EINs?
Yeah, we do it based on EIN number, FEIN number. So I don't know how it's structured, but if your individual churches have individual FEIN numbers, those individual churches are the businesses we're counting. So it's by FEIN number at the company level, and this comes up with POs as well, which I'm stating what the PO stands for. Employer leasing companies, basically, or employee leasing companies. We're not considering the umbrella of a PO as the employer. We're considering the companies, the ground companies, the ground level FEINs as the employer. And I think that's more favorable for the employers anyways, because you're counting a smaller number of people. But it is by FEIN that you will register for the portal. It is by FEIN that you will count your 15. And it is by FEIN that you'll eventually, if you choose to, apply for a private claim as well.
So we got another question about the poster. So when does it have to be up and how do I get it? Now that the poster's live, we would encourage you to put it up as soon as possible, especially before the January 1, 2025 date when premium deductions will begin. And how do you get it? So if you go to our webpage on paid leave, you will see under the employer resources tab, and it will be right there where it says poster, where you can where you can download it.
And it's our link basically goes to the Bureau of Labor Statistics that has all the employer employee law, labor law posters. So now paid family medical leave is one of those many labor law posters that are on the BLS website. So you would get it just like you would any labor law, just like you would unemployment or BDT. Any of those posters are now listed as of today.
Awesome. And so I guess this next question kind of gets to the application process, which we didn't talk about today, but I think we'll certainly outline as we move forward. So how would an employer know if an employee has earned 6 times the state average weekly wage in the 4 of the 5 quarters as these benefits are portable? So this is something when the applicant applies for paid leave, the department or the state will deal with, whether that person has met that monetary requirement. The burden will not be on the employer to calculate whether they've met that 6 times the state average weekly wage requirement.
One thing I wanted to add to that, because I think it was a confusion a little while ago, is that when you're counting your 15 for Maine-based employees, you're not looking at that wage threshold and whether or not somebody's met that 6 times either. It could be somebody that just moved to Maine last week and is working for your company. You're counting that person. It's the number of people on your payroll, regardless of that wage threshold. That wage threshold of 6 times the average weekly wage is when they apply for a benefit. So it's an eligibility criteria. It's not a criteria of like if they're covered for the premiums. You're going to pay premiums on anybody who's on your payroll, regardless if they met that wage threshold or not. It's when they apply for a benefit, are they eligible? They have to meet that wage threshold first, and then every step from there.
So the next question is, I think this kind of gets to whether the benefits are taxable. So will recipients have to pay taxes once the distribution or the weekly benefit begins? And if so, will they get a 1099 form?
They'll definitely get a 1099, and we'll give them the option. Like I said, I hope we have IRS guidance by 2026. But what other states do and what we will do is give people the option when they apply, if they would like to voluntarily withhold, and I think it's 5% state in income and 10% federal. And then they will get a 1099 with the benefit income. But we're hoping by 2026, we will have guidance from the IRS, formal guidance nationally for these PFML programs on the taxability benefits.
Okay. And so the next question is, and I think the imputed income, are employers required to pay imputed income on the employer portion?
I think that's the
The
question about
taxable,
taxability
yeah.
and premiums, which we don't know.
Yeah.
I would look at statute, talk to your tax professionals, talk to your HR lawyers, and hopefully we'll have IRS guidance on that in the future.
Awesome. And then, so I guess if it's okay, we might go a couple of minutes
Yeah.
over just so make sure, and for the folks who have their hands raised, if you don't mind putting your questions into the chat, and sorry about the technology piece.
I'm sorry, the
today.
interpreter can't stay. I have another job.
Oh, okay. I apologize for that. So, in that particular case, I guess we might be able to wrap up in this matter, but, thank you for submitting all the questions, that you have, and I will repeat again. If you can go to the webpage on paid family medical leave, so that's www.maine.gov/paid leave. We also have a one-pager that it kind of explains what employers need to know. And it's on that page as well. And so thank you again for your time, and look forward to further engagement. So thank you all.
Thanks, everyone.
Yeah.